How do I put this? Have you ever been in a relationship where your shorty is so bad you are just dreading losing her or even the possibility of that? But at the end of the day, you know it's inevitably going to end? You know, that middle school type love where you know, things are coming to a close, but she is too bad to let go? Of course, I know each and every one of you guys are answering yes to that, and I have to answer yes to that as well. And that is what I am using as my perfect analogy for the perfect trade setup that I unfortunately had to let go. I wasn't able to take this trade setup, and that is what this video is all about. You know, that shorty that was bad as hell, but you know, it just wasn't going to work out in the long term. You couldn't end up taking the play. Maybe you had your eyes on someone else, something else, right? Well, that is exactly what happened here. We had probably the best setup I've ever seen in my entire life, and I had to let it slip between my fingers, unfortunately. But the good thing about this is the reason I did slip between my fingers is because we were green on all of our accounts. We followed our rules and we actually locked ourselves out of our accounts. So that is good at the end of the day, but what I want to talk about in today's video is breaking down what the perfect trade is, and that is what this trade is right here. Now, we're going to come back to this in just a minute. We're about to hop over to the whiteboard and check out some of our models so that we can make more sense of this when we do talk about it. So let's go ahead and jump right into that. Make sure you guys do drop a like, subscribe, comment down below, I miss her, and let's get into this video. I want to break down this model for both scenarios, both when we are taking a call or inversely when we are taking a put. So I'm going to break down the put one first because that is what we just showed you guys. Now, you may be looking at this and say, oh, we're in a nice little uptrend. It looks like we could continue higher. Wrong. Wrong. What we are seeing here is we are seeing a liquidity sweep of highs. This is your sweep right here. This is step number one, seeing this liquidity sweep. Okay, look. Sweep. Liquidity sweep. Okay. Step number one, you get a liquidity sweep above your highs. Inversely, if we're taking calls, you want this to be below your lows. But once you see a 3 to 5 minute candle closure back inside of this high that you made, that is letting you know that that is a liquidity sweep. And if we do continue in that direction, what you are looking for next is going to be a fair value gap on the 1 minute, 3 minute, or 5 minute. So you're going to look for something like this. Maybe a fair value gap that we created right here, and let's just say that is our fair value gap on the, you know, 3 minute, right? 3 minute. Okay, perfect. You know what we're doing now? We are waiting for a rejection. Why are we waiting for a rejection? Great question. That is a great question. Keep asking good questions. I like that. You get the sweep of high, okay? Then you're pushing back down below. Okay, so we are looking bullish. Now that we get the sweep of high, we are now heading back down to make a lower low, but we are making a higher low, I'm sorry. But once we do see this rejection, we are now disrespecting the overall sentiment in the short term. So this can lead to a longer term drawdown. So if we are rejecting a 1 minute fair value gap, that doesn't mean we're going to reverse all the way down. But what it does mean is that it's showing that cracks are, cracking. Realistically, you have something like this, where you are probably going to have another fair value gap from this move down here. Okay. God damn it. And let's say, because this happens in this example, let's say we get this bounce and we respect this fair value gap. Okay. Then we go up and we respect this fair value gap as well and push down through this fair value gap. That is what we are looking for. Okay. And when I say respect, what you want to see, if we have a gap that looks like this, if you're looking for a push down, you want to see a candle that looks like this. Something along those lines. You want to see the candle push down. If the candle looks like this, that's fine. Okay. If the candle, if the candle looks something like this, if the candle looks something like this and has a, big ass body down, who cares? It's fine. That works. Okay. You want to see a rejection in the form of you are respecting the direction of your fair value gap. So this should all make sense. And by the way, you're getting your entry once you close that candle outside of the fair value gap. So you're looking for this entry right here. Okay, your stop loss is going right here or right here, depending on your risk. And your take profit is going at sell side liquidity is when you are going to break even. Whether that is here, whether that is here, or whether that is here for you, you are taking profits at these three levels. That is the easiest way to explain this model, and that should be dead simple. That should be dead simple. So let's go ahead and take a quick look at the bearish example. Sorry, the bullish example. All right, so let's take a look at this example because I believe that this is a great example for what it would look like in a bullish scenario. So what do we have happen? We come down, right? We sweep these lows right here, making a new lower low, and then bouncing back above this trend. Realistically, you're not going to see a drawdown this far, but I don't give a shit. Okay. Then you get a rejection out of this fair value gap, right? Out of that fair value gap, which is a bearish fair value gap, meaning that you should continue in that direction, right? So we respect that, we move down. What do we see next? We see our 1 to 5 minute fair value gap, right? Get respected. Now, what are we doing? We are entering this trade off a candle that looks something like this because it's inverse and it's showing that we are respecting the trend. Once again, if this candle looks like this, I don't give a shit. Doesn't matter how big the candle is. If it's respecting and closing outside of that gap, it is respecting it, at least for the time being. Of course, you will have to do other measurements, but for the time being, it is respecting it and moving out of it. Now, what we are looking for is a break of this fair value gap now to really confirm the fact that this is going to work out in your favor. Okay, so we're going to enter anyways, not because this is a bad setup, but because it's a good setup with a lot of probability. So this is what it looks like. And this is what I was talking about with break even. So we're going to go ahead and take this play, right? We are going to play this up to the fair value gap. There are two scenarios that happen, okay? What I recommend most, and this is what I do. I set my break even at that rejection of the fair value gap. So if we do, for whatever reason, go like this and then reject right back down, cool. I'm stopped out for break even. I don't lose a single dollar. Yes, I don't make a dollar, but I don't lose a single dollar. That is the way that you do that. Okay, so that's what it looks like if it doesn't go right. So 90% of the time, if you're losing trades will be break even trades, which is very, very good to see. And if not, you will see something like this where you do break through it and continue higher, and then you catch this move. You catch this move instead of trying to catch maybe, this shitty move or maybe this shitty move or whatever. You're catching the right move. You're waiting for that move to happen. And that is how you get the actual volume to come in. A lot of times, and I remember this when I was a newer trader, I would get into trades and then it would be choppy. This is how you avoid that. This is how you avoid that. This is when the orders are coming through. This is when the sweep is happening. This is when everybody is doing the same model. And a lot of those good traders, smart money traders, are getting in off the sweep. And we are catching up on that. Just getting in a second late so that we can make sure everything sets up, but nonetheless taking all of the profit at the end of the day. So let's go ahead and jump back onto the charts, take a look, and let's actually put this on paper with the way that I just explained it. Okay, so let's draw this exact model out. The exact model that I just showed you guys is exactly what we are seeing here. So what do? We get a high that gets put in place. Then we pull back from that high, putting in a low. And then from there, we come up and we sweep highs, creating a liquidity sweep. From there, we get our fair value gap. And what do? We absolutely dump off the map. So this is exactly what I just showed you guys. I just drew this out exactly for you. Now, what happens here? We are getting a sweep of high. This is our liquidity sweep right here on this white line right here. And this is actually prior all-time highs. Silver was at all-time highs that morning. So this was the exact look that we were waiting for. Waiting for us to break and sweep through those highs. Also looking at the 5-minute time frame, we break down and actually get a 5-minute orb fake out, meaning that we did not break orb. We actually went up to orb and then came back down, faking out that orb, which is very, very bearish. We all know that orb is respected very well throughout the day, and we all know that at orb high and at orb low are two turnaround points. Well, we end up getting a turnaround point not only on top of prior highs, making a liquidity sweep, but also orb high, letting us know that we have two bearish confluences already working in our favor, and so we are definitely sitting bearish right now. What are we going to do? Enter like an idiot? No. 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 We're going to wait. You guys can see there is a 1-minute fair value gap right here, and then this green one is a 5-minute fair value gap. So we know that the 5-minute fair value gap is more powerful right now. Obviously, by time frames, that's how you're going to go. 5-minute fair value gap is always going to be respected more than the 1-minute until that is broken, and that is what we're looking for, right? So we see this pullback up into the 1-minute fair value gap where we are looking for a rejection. On the 2-minute time frame, you don't get that rejection. It's not created yet. You get your rejection right here. So really, you're entering off of this right here. You get your rejection and your close off. So we close right there. We are obviously looking like we are wanting to push down. We do get 2 bounces off of our 5-minute, but we also get 2 bounces off of our 1-minute with the sweep, with the orb high. I'm stacking up bearish confluences right now. We are up to 3. Now pushing through, we just broke through our 5-minute orb or 5-minute fair value gap and down below our EMAs. That is confluence 4 and 5. Seriously? Confluence 4 and 5. I know half of you guys watching this trade off of a damn coin flip. I am giving you guys 5 pieces of confluence to give you as much confidence that you could possibly need to enter a trade and be successful with that entry. If you are still here watching this video about almost 8 minutes into it, you obviously want to be a winner. You don't want to be a loser. Stop being a loser. Follow these trades, stack up your confluences. We have 5 pieces of confluence. Liquidity sweep, orb high gets faked out. 1 minute fair value gap rejected, 5 minute fair value gap broken, and we have our EMAs that have now been broken as well. Crossing to the downside. Now, what do we do there? We already have entered off of our 2 minute candle right there. We break through our 5 minute, and what do? Do something that looks a little bit like this. Little something that looks like this. Lay back, yawn, do a little bit of that, a little bit of this, and then you come back and look at this shit. You are up. You have broken through opening price, which is high right here, where you're expecting to see a bounce. You don't see a bounce, so we don't have to worry about it. A lot of times you will see a bounce. So at the end of the day, this is still a 2.42 risk reward, a great risk reward. Take your profits there if you need to. Also, or blow, another point where we know price can bounce out of pretty easily. 2.95 risk reward. Take your profits if you need to. And at the 15-minute fair value gap, which is what our target was for this play, that is the only thing that I cannot help you with. Your targets are going to be different every single time. Okay, of course, this is all going to look different every single time, but at the end of the day, you can see this clear model. You can see this very, very clear model. It happens time and time again. So your target is the only thing that is going to change. If that is your opening price for you, still a great trade. If that is or below, that is still a great trade. If that is 15-minute fair value gap, that is still a great trade. Okay, if it's these swing lows right here, that's still a great trade. So whatever it is, there is no way you could mess this up. If you're taking half profits, it's still profits. I don't care. It's still profits. So this is the model that I've been using to consistently be profitable. And I did want to talk about this just a little bit because we are actually, very profitable right now. So this is our accounts. This is the combine where we're up 2,500, 2,200 or whatever. This is a funded account, where we're up $1,244. Looking to get our first payout coming by Thursday. We have another Express account, which is now up $458. And finally, that last Express account, which is now eligible for a payout, up $822 so far. So this is what I want to say to you guys. It's easy. You're making it harder than it needs to be. I'm telling you this because I was there. I made it harder than it needed to be. I wasted a shit ton of time. Write down these models. Go write down these models right now. Look. I've been doing this for years, and look, I still do this. What's this? This is the exact model that I just explained to you guys, both a bearish and bullish scenario. Go to work, go do some research. Hopefully you guys understand this. If you don't, ask your questions in the comments down below. But overall, this is one of the easiest, simplest, most beginnerist models out there. Now, this is a simple ICT strategy. If you guys are wanting to learn more about this, you guys can look up ICT strategies, fair value gaps, liquidity sweeps, breakup structures, MSS. All of those things are going to help you get better at this strategy, start to see it a little bit clearer. Because if this is your first time seeing something like this, I'm sure it looked like I was just jargoning about jargon. But if this is your 50th time seeing this and you understand about ICT, you probably thought this was a cakewalk, because it is. You just need to take the time to learn it, take the time to get good at it, and then take the time to be profitable through it. Now that is all I have for you guys. I hope that was a little bit of motivation, a little bit of education, a little bit of all of that in between. Please let me know in the comments down below. Once again, if you guys do have any questions, I'll be sure to get back to you guys with that. I can also make short videos explaining those questions if you do need. Now, that is all I have for you guys. Make sure you guys do stay tuned for tomorrow's video where we have Buzz or Chuzz Part 2, and I will catch y'all in the next video.